Hey, what's up, my friend? Welcome back to this week's market analysis, right? I know, right? I haven't been around for the last couple of weeks, right? Because we had the enrollment of the trend following mentorship program, right? So I was busy, right? Making sure the new members are well and things are running smoothly on my end. So yeah, right now that it's over, right? Things are pretty much back to normal right now. Right? So anyway, right, back to this week's market analysis. I want to kick things off with the 3 best trading setups I'm looking at this week. I'll see you there. Okay, so the first market that I'm looking at is Euro Dollar. So let me hide this, alright? A little bit distracting. So Euro Dollar, right? To me at this point in time, it is showing signs of, a major bottom, and let me explain why. If you look at the weekly time frame of Euro Dollar, you can see that, okay, let me zoom out, is that this pair had a massive collapse, right, during the 2014-2015 period, as you can see over here. Right, basically, it has been a very long period of a wide range, right? Then it broke down lower. Then it went to a range again for, a good couple of years, right? And only recently, right, did price break and close above the area of resistance, right? Let me zoom in, right? You can see that the 116 area of resistance, right, is where the market break and close above it. And this is the 200 period moving average on the weekly time frame, and it also closed above it. So it's showing signs of strength on the euro dollar, right? And if you ask me, right, this could be the bottom in euro dollar. And needless to say, I am bullish on this pair. So since I'm bullish, right, the next question is, how do you trade the bullish bias? So when you go down to the daily time frame, right, needless to say, this market is clearly in an uptrend, right? A series of higher highs, higher lows. Okay, and when the trend is strong, like this particular market you're looking at, right, it is difficult for this market to retest back to, for example, previous resistance turn support, like say this level over here, previous resistance, right, that could become support, right? Sure, right? I'm sure a lot of traders are looking at this level, but here's the thing. The odds of this market retracing to this particular level that you're looking at is pretty much slim, right? I'm not saying it cannot happen, but it's quite slim. Okay, so if you are just waiting for this level, right, chances are you are not going to take part in this bullish move on euro dollar. Okay, so let me share with you a couple of trading ideas, right, on how to go about, right, trading this strong uptrend in euro dollar. Right, first thing first, you can use is a moving average, like the 20 period moving average. There is nothing magical about this, right? The reason why I use this is because since that this is a strong uptrend, chances are when the trend is strong, right, the shorter term moving average tends to work better. So you can see it bounce off once, twice, and if you ask me, it could come back lower, right, around this level with the confluence of the 20 period moving average before continuing to trade higher. So this 116 level, right, would be a level to look for long opportunity. So this is how you can actually use the 20 period moving average to look for trading setup. Alternatively, right, you can make use of multiple time frames, like the 4-hour time frame. Let's say I go down to the 4-hour time frame. Again, right, you can see that now the structure of the market is clearer, right? You can see that this is an area of support, right? This is an area of support. So there's a good chance for this market to come down into this area of support, right? Perhaps does a false breakdown, then it close higher over here, right? If that happens, right, this could be another opportunity to get long, right, in expectation of higher prices. So this is somewhat similar to the daily time frame, just that on the daily, you are using the 20 period moving average to define the area of value, whereas on the 4-hour time frame, right, you're just trading off this structure support that you see over here. Okay, so that is my take on euro dollar, right? Bullish on this market, right? And the trend is pretty strong. So moving on, right, let's move on into a market that I believe a few of you do trade, right? Let's see. Forex. Okay, where is it? There. Dollar against the Indian rupee. I believe there are a number of traders from India, and I have requests for the dollar against the Indian rupee. So again, we can analyze this, right? I'll zoom out, right? You can see that this market, right, basically we have this distribution top over here. The market broke down of it, right? Strong decline. Then it went into this period of range over here. If you look at a higher time frame picture, right, you can see that basically what happened, right, is that the market broke down and then it went into a period of low volatility period. Okay, this is significant. This period over here, this low volatility period is significant. Why is that? Because, right, volatility is it moves in a transition from a period of low volatility to a period of high volatility. So if you look back a little bit in time, okay, you can see this market here, right? I would say a lot of markets tend to exhibit this type of pattern, right? A period of low volatility, then it break down, right? A period of low volatility, then it break out. Period of low volatility, then it break out. Period of low volatility, it break out. Now, a period of low volatility, where will it break out? Possibly higher, possibly lower. Your guess is good as mine, okay? But one thing that it should alert you is that, you want to expect volatility expansion in the coming weeks. Okay, so this is one thing, right? So how can you trade this so-called potential volatility expansion, right? So here's what I'm looking at. So since the daily time frame, right, the price is below the 200 period moving average, my bias is to short this market. The question now is where, right? Since on the higher time frame, on the weekly, we see that volatility is low, right? And we are expecting an expansion in volatility. Okay, good. So then we went to the daily time frame, right? We have our bias, which is towards the downside since price is below the 200 period moving average. Okay, so now we have these two pieces of information. The third question now is where do we want to short? Again, nothing too fanciful, nothing to complicate, right? No need magical ratios or anything. Okay, this is an obvious area of resistance. What you can do is to wait for price to retrace higher into this area of resistance, right? And then give you an entry trigger to go short over here in expectation of lower prices, right? So this is a potential setup on the dollar against the Indian rupee, right? So as you can see, right, I like trading, support resistance. I like, just to use simple tools to get my bias, like moving average. So this is the dollar against the Indian rupee, right? I would say this is another potential setup that is worth looking at, because on top of the fact that, weekly it has a volatility contraction, which, I expect the market to either, have an increase in volatility in the coming weeks. Okay, so let's look at one more market, right? A little bit more exotic. How about what's this? Cocoa, right? Cocoa. I'm sure all of us have cocoa. You drink Milo, it's cocoa. You eat chocolates, it's cocoa. You what else? You poop cocoa? No, you don't. Although it's the same color. Yeah. So yeah, cocoa is definitely a market that it's closely related, to our everyday life. So again, right, weekly time frame. Looking at the big picture, you can see this market. Distribution stage, market broke down, then it consolidated over here. Okay, so this is the big picture of cocoa, right? Pretty much the market is in a range right now. So if you go down to the daily time frame, right? So now you have your bias. You see that again, nothing fanciful, simple technical analysis. This is an area of resistance. Price is below the 200 period moving average. You can look for a shorting opportunity here, right? Do you want to go short here at this level? Well, you can, right? You can, right? If you are the type of traders that just trade off levels, you can just go short here and at least have your stops, right? Above here, above this area of resistance. You don't want to put your stop loss just above this size, because you're just simply telling the market to take my money, right? Because what it's likely to do is just it trades higher and then poof, continue trading lower and it hits your stop. So if you want to just trade off a level, give yourself some buffer. Don't put your stop loss too tight, right? Put it at a level that it will invalidate your trading setup. So let's say, for example, what is this trading setup? This trading setup is just simply trading off this resistance area. So what you want to do is to put your stop loss where the resistance is no longer valid, where the resistance is broken. So where is that level? Well, if you ask me, I'll say somewhere around here, right? The 2250 to 2300, around this area. This would be a pretty decent level to tell you that, hey, resistance, chances are, it's not holding anymore, and, I'm wrong, I better get out of the trade. Okay, so this is what I mean by, setting your stop loss where it invalidates your trading idea. Okay, so this is a cocoa, again, another market worth watching. If you look at the weekly, right, the trend is also, longer term trend is down. You have a strong sell-off, starts to consolidate, and hey, who knows, right? If the trend is your friend, it does continue, you can expect lower prices to come on cocoa. Alright, so yep, right, so that's all I have for you in this week's market analysis. It is definitely good to be back, right? So just a brief recap, right, what we spoke of today. Euro dollar, bullish in a strong uptrend. We talk about the dollar against the Indian rupee, right, looking to short this market. And last but not least, we spoke about cocoa, right, and also looking to short this market. So with that said, right, I hope you have enjoyed this week's market analysis. If you have any questions, feedback, feel free to let me know in the comment section below. And if you have enjoyed this video, please hit the like button, hit the subscribe button, and that would really mean the world to me. Okay, so with that, I'll talk to you soon.